This is Mark, and today we're going to have a case study about the Jade Lizard on XLF, or how I have a successfully weekly strategy on this financial basket. Have fun! Talking about this XLF, maybe I have to explain. This is all the tickers we are working in the Tasty Trade account, but this is actually an ETF fund on the financial sector. So there's JP Morgan, there are all these American banks and insurances, and I think it's worth to look at it because you will see indexes or ETF, they mostly have a lower volatility, but always that you have less risk in doing a strategy and because it's an index and they consist several shares. So I think it's worth to look at it, and I think I show you now almost day by day a kind of a report in what I did and actually how I have performed within 1 week. So on the 8th of May, I have decided to do this kind of strategy with an expiration of the 19th of May. So it's a kind of less than 2 weeks, 10-11 days strategy. As you can see, the Jade Lizard consists actually to selling one put, then one call, and buy another call. So in other side, I have actually a downside risk, as you can see, of the taking over this XLF at 32, let's say minus the credit, but my upside risk is actually limited to 0.5 because you can see here I sold and bought a call. So in other words, I cannot lose more than, let's say, these 50 points, or let's say here when I get 41, so the maximum loss on the upside is 50. But on the downside, I agree. Now, as you see that the banking sector lately is a bit under pressure, and we will see now the next days how is it. So I got 41 credit, as you can see here, in entering this strategy into the Tasty Trade account. I get 0.41 credit. So let's see how are the next days. The next survey is on the 10th, just 2 days later. You see the index is 3208, so more or less it has dropped a little bit. And you see when you sell or buy options, the time is very important. In other words, when you have a short-term options like that, and actually you buy, let's say, a call at 32.5 and the stock goes down, I think it's like a killing for the option, because you can see that the option here, which actually we got a decent price now, already dropped to almost to nothing. And I think this is the risk. What you can see here is that if you don't catch the price of the option, let's say on a short-term option, then actually this is really difficult. Can you imagine now the index must come from 32.08 to 33, because remember I sold the call option at 33. So you can see already that now the credit just after 2 days is just 38. Remember we sold at 41, so we already are in the profit side, just because these two call options, which you can see here, one is almost worthless and the other one is just a fraction out of it. And maybe the other thing is that the put option is not really increasing a lot, because you see I have a 32, so we are still a bit above the strike. So in other words, the time value loss actually on that option is working as well. So as long as it keeps around this 32, I'm on the good side. Here is the next survey on the 12th, just 4 days after the initial purchase, and now you see we are already 32 down from 41. The index actually has not changed a lot. We are always around this 32, and so in other words, nothing big happens. That just the call options are already now almost worthless, but you can see that the put option is not really increasing. Well, it's because the expiration is in about 1 week. So in other words, the put option, it must be really a significant drop, maybe to 31.5, that really this put option would get a kind of intrinsic value. which at the moment is still about now 0.09. So as long as 32 is fine, I'm not afraid that this put option would be much bigger. So as I said, we are now 32. The put option is now actually the full value. Now we look what is the performance. This is a Friday 12, so we go and look about the 15 as a next survey. You see here we are now at 32 almost, and the option is now coming from this last Friday from about 31, 32 to 25. So you see the put option already lost again because we are around this 32, which is the strike of the put option. So as I said, this is really time value loss now for even for the put option, because you can see the call options. The call options are here. They are not really, I mean, they are both already worthless, but the put option is not really now moving. You see, I'm still here about 27, 26. So this is actually what is the normal price for the moment. And I would just wait now because there are 4 more days to go. The prices on the 18th, just 1 day ahead of the expiration. The index has come up. I mean, there were some good figures, and the whole stock market went up. So the index went right away from 32 to this 32.52, which is excellent actually for my position, because remember I had a kind of, you can see this here down. I have a 32 half put, sorry, 32 put and 33 call. So in other words, it's exactly in between. So what happened even 1 day ahead of the expiration, you can see here all 3 options we would say are practically worthless. You see, you can see this, all these 3. So it's only between 1 to 2 and 1 to 2. Now you could tell me, well, why I should close it with a debit. I mean, I would close it and have to pay it. It's because we have to admit that this index can move really fast. I mean, I would not be surprised that even on Friday it could go up to 33 because of maybe of a very good stock market in the financial sector. So I think it's always good if you get really this kind of minimum that you can actually cover the options with a one debit. Then I think it makes sense. You see, so I enter an order in buying 2 options, not the 3. I buy only those 2. Actually, I was short this one, these 2. I bought with a 2 debit. So in other words, I pay 1 for this one and 1 for this one, and I get executed with 2 debit. So in other words, I paid. So my profit is 39 because initially I sold at 41 and I bought at 0.2. The XLF, my previous position of the 19th of May has been closed. I right away go into a new transaction. That means I make a new Jade Lizard. This one, the expiration is the 2nd of June, so it's again in 2 weeks. You can see here I now slightly increase the put level from 32 to 32.50, and even the call level is now 33. This is a quite narrow, how can you say, a very narrow spread, because I expect that the index will be within 2 weeks around this. It could be really exploded up to higher, but I think the banking sector is still a bit under pressure because now it seems that these problems with the small banks have been solved. But nevertheless, I think that the potential to go down again is still high. I get a credit of 0.52 as you see here. So in other words, even the market would go up, let's say over than 33 or 33.5, and I would have here to cover it with, let's say, a loss of 0.5. Well, at the end it's a kind of break even because I have already a credit of 52, receiving 50, paying 50. So in other words, when the market goes up, okay, I don't lose, I don't win anything. It's just a kind of break even. And on the downside, always that I would have to take over the put. But here again, I get a credit of 52. So my break even is actually at 32 and not 32.50. So you can see this is a kind of transaction you can do every 2 weeks or every week. As you can see now, I do a kind of weekly expiration depending a bit of the situation. I maybe adjust it. Like you see, I have here 32, so maybe the next week I will do again a 32.50 or whatever. I adjust this always according to the current situation. It's very nice when the index is exactly in between these two strikes. That's perfect, or something like that I try to do. This Jade Lizard strategy on the XLF, you can see that this strategy can be adapted. I would really prefer on index of ETF index. There are more to come, which I will give other examples in my portfolio. But the idea is still interesting because as an index is not moving maybe like a share, or you can control it a bit better. The risk premium is certainly definitely lower, but on the other hand, you use weekly strategies. So in other words, you just adjust it here and there and get a kind of risk premium as you have seen in this example. So if you have any question or suggestion, just feel free to contact me on this email address. I hope you have enjoyed it, and see you next time. Thank you. Bye-bye.